before you make an investment, you probably want to ask yourself, do I have to believe this, as opposed to, do I want to believe it? And the most obvious long will probably make you money. The most obvious short situation is probably going to lose you a ton of money. I want the portfolio manager that is long the stock to read the bullet points, and then he goes to his analyst, and then they have to sweat bullets. This company that should stand for trust is particularly untrustworthy. It's almost as if you look at this and say, well, that's not how grown-ups are supposed to behave. If it's working for the time being, even though it's complete fluff, it's hard to bet against it.
Hello and welcome to the Margin of Sanity podcast. Today I'm talking with Siegfried G. Eggert, owner and operator of Grizzly Research, an investment research firm specializing in the art of short selling, that is, betting against a company's stock. The day before we recorded this, Siggy and his team published research on Trustpilot, sending the stock down 30% in a day. We discussed that and much more on today's episode, including his time at Geo Investing, which you may know from the documentary The China Hustle. Companies Grizzly Research has covered include Shark Ninja, Pinduoduo, HelloFresh, Celsius, Archer Innovation, and many more. They are at Research Grizzly on Twitter, and all their research is free on their website if you want to take a look. Of course, nothing we discuss on today's episode is intended as financial advice, nor is it a solicitation to buy or sell anything. When it comes to today's episode in particular, kids, don't try this at home. The Margin of Sanity is proud to welcome, from Grizzly Research, my new friend and top grizzly bear, Siggy. Thank you really for coming on and talking to me today. I'm very excited to talk about short selling, honestly, because it's not necessarily the most mainstream type of investing, especially in the retail and even institutional world. But I think it's the coolest by far because you really have to stick to your guns, I think, to be a short seller. And, some of the most ubiquitous investing films are involve betting against something. And yet you're the first short seller I've ever been able to talk to. So it's a huge privilege for me, and it's a total treat. So welcome, and thank you so much for taking the time.
Thank you for your kind words.
So usually I don't ask this question because I'm not really that interested when it comes to long investors, because usually we have the same story. But with short selling, I actually am very curious. How did you get into short selling to begin with? What's like the early days, paint me a picture.
Right. So I think my first contact with short selling in depth was at my time at Geo Investing. Before that, I had seen presentation and found it very intriguing, for example, by David Einhorn, short cases that he made. And I've always found it intriguing. But really, at my time at Geo Investing is where I learned how this business works in depth. And Geo Investing is a research company out of Pennsylvania. Very good team. They really focus nowadays even more so on microcap investing, small microcap companies. But at the time, they were really in the activist short selling world, one of the pioneers. And there was also this documentary that's called The China Hustle. That's an interesting one where Geo Investing is prominently featured. The idea is that after the 2008 collapse, people were looking for the next big thing. And in the next couple of years, you had a lot of, especially reverse mergers, but different mechanisms. Companies that were operating in China went public in the US. And there was a lot of hype around that. This is, a new growing economy, exciting technologies and whatnot. And Geo Investing was really one of the first companies, and then along with Muddy Waters, who really looked into this in depth and figured out and sent out investigators and had people on the ground who understood what was going on, that then could report back, well, what is portrayed to US investors is far from what is really going on here on the ground. And these people have been sold lies, essentially. And we're also able to prove it. So especially in the early phases of this industry, Geo Investing, I think, was a very dominant player. And when I started there, the industry was also a lot less developed than it is maybe nowadays. And I'm talking about short activism only, writing about it publicly and stating your facts publicly, which oftentimes goes along with the fight. I'm talking about this
Yeah.
specific niche, not about short selling as a whole, which is a different story, I think.
Right. I know Gio from the China Hustle documentary. And even when I was reading through the Grizzly Research website, I saw that you had private investigators in China. And the first thing I thought of was that documentary, because I believe they flew to China, right, to take a look at some of the factories that supposedly had all of this volume. And there was like one truck per day coming in and out of this factory that should have had, 50 or 60 or something like that.
Yeah. This is like good, we call it on the ground due diligence. We had one report, for example, this year, Microvast, MVST, which is very reminiscent of this. The simple idea of saying, okay, you say I'll just give random numbers, right? You say there's 300 people working there. We checked the parking lot every day for the last month and then compared this with satellite pictures. And I think at the highest, there were 25 people here, So oftentimes due diligence that is very convincing can be as simple as that. Going there and looking at the parking lot and seeing if anybody's actually there, working. And that's the type of work that we try to do, and that maybe makes us different from like traditional hedge funds or investors. We try to find the stuff that other people are not necessarily looking at. Yeah.
Yeah, it seems like you have to approach it with a starting place of mistrust, verify, then trust, as opposed to trust and then verify.
I think that generally you want to be critical as an investor, generally speaking, like what do I have to believe this as opposed to do I want to believe it? I don't think that we're necessarily distrusting, but when something is too good to be true, it usually isn't, Yeah. Like when something seems out of whack, I'd say 9 times out of 10, there's something really wrong with the company. It doesn't mean that we can prove it every time or that we really are right about, but there's something going on,
Yeah. So on that, when as I think most long investors in general, there's certain things that'll happen in my life where it could be something as simple as I'll just see how much my fiance spends on a piece of makeup. And I'll think to myself, oh, wow, like a bell will go off where I'll just think that costs nothing to ship. It costs nothing to make. And she just paid 35 euros for it. There's like a bell that will go off in my brain. And I don't want to say I'm sure, but I'm almost sure that it's the same for a short seller where, there's just some moment where something clicks and you start wanting to do more research, dig deeper, and you can sniff it out, I'm guessing. If that's true, what might be some of those warning signals, red flags, those little bells that go off in your brain?
I really like your approach. It reminds me a little bit of Peter Lynch's work where, you look at what's happening around you and you say, is this actually a hot product? And you see it and you say, yes, people are paying crazy margins for this,
Yeah.
And maybe then say the equivalent on the short side is a short seller that says, yeah, I don't believe that, So you listen to the management story, listen to the presentations, you look at the numbers, and at some point you go, nah, I don't think so, sir. That is kind of the instinct that you develop over time. And it's true that maybe it's a useful perspective to try to put yourself in the shoes of the CEO or the decision makers at the company and say, okay, if I'm a super ambitious guy, just imagine that, and I have maybe some criminal energy. It's not that I set out to commit fraud, but I really can't lose, and I need to show the people what I want to show them because, I want to have the best bonus possible here at year end. And I'm, that type of guy. And I can't ever report a loss. And that's, I think, oftentimes also how people get into these very horrible situations. It's not that they set out to commit fraud necessarily. Most of the time they don't. They just slowly slip off into something that they think is okay. And then sooner or later you find yourself in a giant mess.
Yeah.
And in every industry, there's only so many levers you can pull, right? In this industry, you might be able to do channel stuffing. In this industry, you might be able to create fake online customers. But there's only so many things that you could do. And then you maybe sit down and say, okay, what would I do if I was in his shoes? And make yourself a plan. And then you just go about trying to see, okay, how could I even catch any of this? And at this point, you're already pretty far down in your investigation. It's just theoretical at this point. You'll have, at the end of the day, you'll have to prove things, work it from the other direction as well. But this kind of inversion, this thought process can help to sniff out what is really wrong with the business.
Yeah. not to go down this road, but you said channel stuffing, and I did happen to see that one of the companies you covered was Celsius.
In the
And
early days, yeah.
yeah, one of my write-ups is why I sold that company. And, they might call it channel filling.
Yeah, I'll have to say, we're not on a holy war, and we're not every time right.
Yeah.
You see in our track record that over the long term we tend to be right very, very often.
Yeah.
But at the same time, I don't wish ill on these companies. And if you do actually honest business, then I think that maybe our criticism at the time, while it might have been legitimate and right, maybe was then over time outweighed by other positive factors the business has going for it. So not everything that is going against us is a nonsense bubble or so. Sometimes we also might be wrong about things, and there's a fine balance between self-assurance and the certainty and confidence that comes with it, and self-doubt and being critical about your own work.
Of course, even in long investing, things can go wrong that nobody would have ever been able to foresee. I mean, the Warren Buffett's been wrong a bunch of times, and at the end of the day, you are in many ways taking a bet one way or the other. It's something like there might be a company with all sorts of misdoings, but it just so happens that their product actually catches fire, and even they might not have seen it coming,
Right. Right. Which is, I think, like the good way for the company. I think more often than not, the short sellers run into the situation where the product even does nothing, but the stock catches fire. And then what you got to do? You'll have to manage your risk, right? You can't just sit there and keep losing infinite amounts of money. Your broker's not going to like that.
There's so many companies that, if I was a short seller, I'd be broke, I think. I have a limited ability to predict what a business will do to some extent, but I can't see the future. And to predict what a stock will do, especially in the short term, is impossible.
Yeah. Also, your holding periods and time horizon becomes a very relevant factor, right? Over time, you can say, well, if I assess the fair value of this business at this and this point, I think it's trading at a great discount. I don't know if it's going to come back to fair value or going to be overvalued tomorrow or next week, but at some point, in the next 5 years, I think a cycle will turn around, or 10 years, I can see this being a viable thesis. If you're trying to trade and you have shorter time horizons, all of these things become extremely difficult, obviously.
Yeah. So, you were saying before that part of the process is putting yourself in the position of the CEO. I like the mentality of first dismantling this idea that the people who are running publicly traded companies in the United States or around the world are somehow these magical beings that can do no wrong, and they're all on the up and up, and their incentives are pure. I think there's a lot of people, and myself included, when I started investing, I was not somebody who was skeptical of management, and it was only through a little bit of bloody experience that I became more skeptical, and I demanded sort of more scrutiny on the people who are actually running companies, understanding that there's such a long history of, fraud and just frankly bad management throughout the world that it's silly to think that'll all stop, that's not just human nature and that'll continue. So I like that you start with this skepticism of the incentives of management. And Lord only knows that share price performance, based compensation, things like this create a twisted set of incentives for people at the top.
Yeah, you're entirely right. It's also that I think more companies over time fail than actually succeed on the stock market. And there's different approaches, of course, how to behave towards management. And there are many investors, long investors, that say, I don't want to talk to them at all. They're also terribly impressive and they can sell me on anything. I want to, make up my own mind.
Yeah. So once you become skeptical and you start that process, how do you, usually proceed in the investigation process? Are you starting with the annual reports? Are you starting with sort of outside research? Maybe you can walk me through a little bit. Once something gets in your sights, how do you sort of zoom the target in?
Right. So I think you already mentioned a couple of important points. You need to read the SEC documents for US companies, right? You want to make sure that you read the annual reports. You don't have to go through every single line. Over time, you should be more efficient than this when going through these documents. But you want to make sure that you understand everything that the broad investor base understands and try to get an idea of what the hedge funds and professional investors think that are along the stock. What's the bull thesis? What do they care about? What do they track? So this is just developing a basis. From then on, you have to go the extra mile and maybe go through the exercise that I just mentioned before. What type of fraud could be committed here? How would it show up? You also want to do a lot of channel checks that go beyond traditional hedge fund work, like visiting actual facilities, counting trucks going in and out, looking at web traffic and other related data, app downloads, and things like this that can give you an indication of how the business is really going. And then you link this to what you already know. And over time, you can develop, hopefully, a convincing case. More often than not, we end up writing a report that we then in the end don't deem good enough. So more than half of our reports are not published. And that's just the nature of it. And these are things that are already so far down the line that we've actually written a report about that. And that's after reviewing hundreds or thousands of companies as a team before that, where we then narrow down to the handful that we investigate further.
Yeah. It has to be a silver bullet, I guess, more or less.
Yeah, you want to have something meaningful and differentiated to say. I always say it should be differentiated and meaningful, significant, right? So tell me something that actually matters and is important. And then I want the portfolio manager that is long the stock to read the bullet points. And then he goes to his analyst team and says, did we know that? And then they'll have to sweat bullets, right? And at best, there's also sources that they can click on and they say, oh my God, these guys are right and we can replicate it easily. And, it is important, it's very bad. And we didn't know about it because the company was hiding it. That's of course a theoretical scenario, but that's, to some degree how we think about it. That's the bar for our research publications.
Yeah. It's not a bear case. It's a short case.
Yeah, I mean, we're not giving investment recommendations or anything like this.
Yeah.
We just do hardcore research. That's what Grizzly research is about. So everybody can do with that what they want. It's free to read. It says openly in our disclaimer that, we're investors first and we're biased in our opinions. On the other hand, people would, of course, say, well, if your research is so great, why are you not taking a position then? And, so this cuts, of course, both ways. But I'd say if you're at least honest and upfront about it all the time, that's the best thing that you can do.
Right. So you were saying before that at least half the time you don't even publish the report because you don't deem the research good enough. Where is that line between, maybe there's something strange going on, maybe there's a little bit of an overstatement of this, but it's not quite worth, disclosing it and or taking a position or anything? Is overvaluation ever enough of a, gross overvaluation ever enough of a case?
Yeah.
How does valuation, I guess, play into this? Where's your line?
The companies that we target, I want them to be overvalued. I wouldn't want to go after an undervalued company, but valuation is the smallest aspect of it almost, not in the sense that valuation doesn't matter, but in terms of this is not what our investigation is about. Other people can read the financials and put a PE multiple on and then can say this is too expanded or too little of a PE multiple. But what does our opinion then really there matter? But what might really matter if we say, okay, these earnings that you use for your calculations are all not real, then, and that's then really what we focus on in our investigations, right? So it goes beyond that, but it always comes back to valuation, right? At the end of the day, you're buying a piece in a business for a certain price, and you might be paying too much for it or too little. And that's what the stock market is about for traders and investors, right? So, I think valuation is for us oftentimes a starting point and an ending point, but not something where we spend the majority of the investigation on. It has to be on other things.
Gotcha. And so, when it comes to actually, this is another, sort of question I've always, I guess, had when it comes to short selling. Risk management is something I think that maybe is used to sell a lot of financial products, but I guess when it comes to shorting something, it's very important. I would imagine it's important to protect yourself against being wrong because it's sort of, theoretically, if you just took a no hedge short position, you can conceivably lose an infinite amount of money. And it also stands to reason that, things might go against you and you want to be able to wait without, having to change your pants every couple of, 3:30 Central European time every day.
Yeah.
How would you, I'm sure it's different for every position, but how do you think about protecting yourself on the upside, I guess, or
Against squeeze scenarios of the stock going wild, right? As you said already, you want to pick your battles, right? So not every company that seems dramatically overvalued, they have no revenue right now. The technology seems nonsensical, and it's trading at an insane valuation. Well, it could still double against you, and that's the humility you have to live by. That's how you want to manage it. You can, of course, buy call options against your position, or you can just buy puts where okay, this is how much I stand to lose. If I just bought puts on a business, I can only lose the option premium. I'm not going to lose more than this, as opposed to short position, which can more than double against you, right? And when I say pick your spots, I think, for example, stuff that is extremely volatile, small stocks, even those that seem objectively like very attractive short opportunities, are very hard to hold. Some biotech might put out even shoddy data that looks good on the surface, and all of a sudden the stock went 5x against you, and there's no way you can hold your position through that. Your account is gone now. And these are scenarios where you'll have to consider somewhat realistic worst case scenarios, right? Because that's something that just happens to short sellers in this market. And the name of the game is to stay alive, right? So you want to manage for the downside, not as much for the upside, right? So what's going to happen if things really go wrong against me? And then you calculate from there backwards what type of risks you can actually take. Right, you don't want to you don't have to assume a scenario where the entire world is falling apart, but there is especially idiosyncratic risks in some of these smaller names that are just making shorting extremely dangerous. And I wouldn't advocate for it. Yeah.
Yeah, if you have an already dubious company that knows that there's people shorting it, there's nothing to say that they couldn't continue doing what they've been doing and try to run you out of business. I'm kind of curious if you have, it's a topic people talked about a lot. I don't know if it's that important, but, sort of recently during that meme stock frenzy and everything, there were these famous short squeezes. I don't even need to, anyone listening to this should already know what I'm talking about, but GameStop, AMC, all of that. Did this sort of come on your radar? Do you think about this fear that there's now this community of people on the internet looking for heavily shorted stocks specifically to create a short squeeze type situation? Is this something you factor in?
Yes, that is definitely the case. They'll attack you if they get the chance. I think part of it is also, it's portrayed to be some retail trader movement. I don't think it is. It's more a coordinated thing by professional funds who then lay false signals here and there, so I'm very suspicious of it, but I'm also looking at it as not an idiot mob necessarily, but it's a trap.
Yeah.
I said to my guys the other day, the most obvious long position in the world, even though it seems just so super obvious, you're going to probably make money on it, buying it now. Amazon, Microsoft's been doing better than expected since I was born. So maybe this continues probably, even though it's too obvious, nobody's going to pay you or hail your write-up for this insight, So it's maybe extremely unattractive from this perspective, but on the most obvious long will probably make you money. The most obvious short situation is probably going to lose you a ton of money, These obvious shorts are more often than not traps, at least in the short term.
Right.
And if you really want to trade these, I think the only way to go in there is to go with a lot of capital, a good plan, be a professional, and have long time horizons to hold these things through. Because in the meantime, you'll have to take probably brutal volatility that's going against you oftentimes. Yeah.
Yeah. You want to be the guy popping the balloon, not the guy picking the rubber off the floor, so to speak. Yeah. This makes a lot of sense. I'm kind of curious, do you have any sort of examples on either side of a short going really well or going not so well that come to mind that you're able to talk about?
I can talk gladly about, I think GSX is a company I don't go to, but at the time GSX was a very prominent situation where we first wrote about the company and then we had a very good follow-up report. I think that was very good research. Other prominent short sellers also, mentioned the name negatively, and it was a big thing, and the stock just kept going against us, doubling against us, tripling against us, and it was inconceivable. We didn't understand what was going on. what we then learned early in the next year was that Archegos, a hedge fund, had essentially lied to its banks, to its brokers, and posted the same collateral multiple times, and therefore like used this scam to pump up certain stocks. And GSX was, if not the most prominent one that they pumped. So it was all artificial nonsense manipulation that cost us a lot of money. But even when we really felt like we had the smoking gun evidence and really, really strong research, for a certain period, the company was able to manipulate it against us. Yeah. And that is something where that basically taught us, even with the best thing possible, even that thing can go against you for quite a while, Yeah.
Are you ever worried in a situation like that where there's other hedge funds or firms shorting the stock? Are you ever worried in a squeeze scenario that, you'll be the last one to cover or something like that?
We try to avoid squeeze scenarios very diligently. So that's part of the risk management. You just don't want to be in something where other people are forced to cover or you are forced to cover. Both things, you don't want to have that. So you want to look at short interest, outstanding days it would take to cover these positions, that outstanding, the utilization of the borrow, the cost of the borrow. And, between these and other data points, you want to make up your mind if this is an attractive short squeeze targets for traders who want to do this, or if it's something that really doesn't have any risk of getting squeezed, right? But that's just part of the normal risk assessment process. I would never take this as like a long thesis, but I do take it as a major factor when considering a short case position.
Right. This makes sense to me. And so after you, take a position, you publish your research, are you watching trading volumes, management commentary, news cycles? How do you monitor a position after you've taken it? What are you looking at?
I think you mentioned the right points, right? You want to stay updated on, of course, what the company says and reports and how they react, how the public discussion evolves, as well as how your data points that you maybe found that you think are especially important and new, how these evolve then over time, right? So that I think is just part of being disciplined and staying on top of the company and its events. On the short side, you probably have to manage more carefully towards events that could hit you negatively, It's also easier for companies, at least in the short term, to manufacture a good appearance, at least in the short term, right? Where there's little incentive to do the reverse. So that's just something that you'll have to consider when trying to hold a short position for a longer period of time.
Yeah. I've heard this and I never understood it, that there's sort of a, I don't say negative, but negative connotation about short selling, and that companies, whenever somebody takes a short position and publishes research, the company never says, "Oh, we're so glad that, people are trying to keep us honest." It's always like, these guys are out to get us. And I've never understood it, because short selling is I would imagine there's very few short sellers out there that are, publishing junk research just to kind of make a quick buck. Maybe there are. And I'm kind of curious what you think about that world.
Yeah, there's probably also a handful of people who are just keen to bash a company. Once they've gone public against the company, they feel like they're on a holy war. And, basically it only ends with the death of one of us kind of mentality, which is not necessarily, I think, the right way to go about it. Certain situations it might be, The short selling crowd as a whole also is maybe not particularly likable. These guys come to your house and tell you everything that's wrong about you, right? Or wrong with your investments and what you missed, and, implying basically that you didn't make a smart choice buying the stock. And they also come in with financial incentive bias, right? That you understand. You just want to knock the stock down because you're short. So there's a lot of negative implications for that. And some people even call it anti-American, which I think I understand the other criticism, but I do think that this is extremely valuable and important. I don't expect applause and praise and people to be thankful. The viewers say, for every thank you message, I get 50, FU messages. That's just how this works. But it is important to call out wrongdoing.
Yeah.
But you can't necessarily, would be against human nature to expect praise for this. That's just how short selling works, I think, a lot of times,
Right. I think to call it anti-American is,
Yeah,
and I
you want
consider
to take
myself a
down
somewhat
or a fine
patriotic guy.
company, Of course, the guys screaming the
Yeah.
loudest about how you are horrible are the worst guys themselves, right? They
Right.
come
But,
up with
you
these
can't publish a
nonsense.
short position and suddenly the company loses revenue. You know what I mean?
Yeah, I didn't. I'm
I've
just
never understood
reporting
that. If
about the
some's
stuff
short,
that you guys already did. It's not as if like
yeah.
I'm running your business and I
Yeah.
made fake accounts
Yeah.
or cooked the books or so. You guys did this.
Yeah.
Yeah.
It's anti-American in my mind. It's anti-capitalist, anti-American to run a business fraudulently.
Yeah, obviously.
You know what I mean?
And I would argue to stand by and watch a fraudulent business succeed where you know full well that what they're doing is clearly wrong and you don't say anything.
Yeah. And usually it's the short sellers who find things before the regulators. I mean, my experience.
In my experience,
there's a great documentary about these three guys. I think they were working for Boston Insurance Group, something like that, who had basically discovered the Bernie Madoff fraud years, almost like a decade before it was public. And they went to the SEC and they went to all these regulators and tried to get them to pay attention, and nobody did.
Like, imagine you're one of these three guys that were on top of the Bernie Madoff fraud a decade ahead of everybody else. And they had to watch this guy become a mainstream investment guru star, knowing full well that it's all a lie.
Yeah. Yeah. And if you, I've always thought of short sellers as like a really important part of the investing ecosystem. Even from day one, I never understood that logic. I'm sure there's a reason for it, but as you said, I guess you go to their door and you tell them everything that's wrong with their house. But you know what? If it wasn't for you, it wouldn't be until the water was pouring in through the roof.
Yeah. But still, it's like the Persian messenger syndrome, right? The guy that brings the worst messages is not the guy that you love to hear from,
Yeah. Yeah. That's very true. So, talking about that, finding red flags and seeing things before other people, look, I'm not about to become a short seller, but I am a long investor. And I'm kind of curious sort of what red flags that retail investors or even institutional investors typically miss. How can I and anyone who follows my Substack avoid being on the other side of one of your positions besides just checking your website daily?
Yeah. I think it's a combination of, I think you said in the beginning, you mentioned a healthy degree of distrust, right? You don't want to hate on everything that you see. You want to give people the benefit of the doubt initially, but then afterwards, before you make an investment, you probably want to ask yourself, do I have to believe this, as opposed to, do I want to believe it? Is there good reasons why these guys are seeing margin expansion or forecasting such a strong margin expansion? Is there really a scale effect to their business, or is this all just rhetoric to promise us like better economics than they will ever achieve? Is this business maybe cheap on a price earnings multiple right now, but bleeding cash so quickly that it's probably never going to trade at what I perceive as a fair intrinsic value before it's completely run down, right? So you want to, as the same way that we want to appreciate the bull case for every short position, you want to appreciate the short case. Think about it from this perspective, right? So you can give me a call, but if you don't have a short seller friend, you just think about it. What would my short seller friend, my imaginary short seller friend, say about this business? I don't trust this. I don't believe in this. I don't, and then we would get in an argument. What would we say? So going through this mental exercise is probably a useful thing. Just the general idea of maybe playing devil's advocate, right? Trying to argue it from the other side and see if that other side maybe even has better arguments than you have.
Yeah. Yeah. So you have these investigators in China, which is a really cool thing to say. And I'm kind of curious, there was this period that we talked about right at the beginning, right? Geo investing and Muddy Waters sort of uncovering these microcap fraud companies in China. Yeah. I'm kind of curious, why all the investigators in China? Is this stuff still going on? Is that the same sort of dynamic playing out again?
I think there's a couple of dynamics at play here. Of course, China's just a big economy, right? But a lot of consumers, lots of businesses that, people just are interested in and would like to participate in, want to participate in the rise of China. That makes maybe the stocks somewhat attractive. And it's also a situation where It's not that the people are bad or even prone to fraud or anything like this, but you have a legal framework that is basically making it extremely easy to commit fraud. If you are a Chinese citizen, you're in China and your assets are in China and you lie to US investors, then you don't have to be too terribly afraid of enforcement. It's just that in the worst case, your shtick is going to be over, right? And you can't tell these people lies anymore and sell them paper that's worth nothing. But again, and that's a problem of the legal framework, maybe, you know? And it's also, generally speaking, a lot easier to make stuff up about, facilities and operations in foreign countries. If it's in your backyard, it would be a lot easier for you to check. You had some uncle working there and people would know, okay, this is, they'd add some understanding of what's going on. If they tell you about their brand new facility, state of the art that they built in Northwest China, then, you shrug and you hope that the AI pictures that they show you actually look like reality, right? So it just makes it a lot easier for foreign operations to misrepresent. And that's just what we see. And for the investigators, there's also the aspect that in most jurisdictions, you can find a local private investigator that's fairly reliable. You find a good guy in the area. In certain jurisdictions, you want to have a guy on your payroll full time because you're not going to find a reliable person on a case-by-case basis.
Right. Right. That makes a lot of sense. And you were saying before that there's so much general interest in China. One of the things I look at as a long investor is I look for ponds that sort of don't have a lot of fishermen in them. Where does nobody want to go? And then maybe I can find something valuable there. And I'm imagining for a short seller, it's maybe the opposite, where you think, well, where's everyone excited and, throwing caution to the wind, and maybe I can find some, fraudulent stuff there. And not to be too trendy, but do you guys have your eyes on any of the stuff going on in artificial intelligence and high technology companies and this sort of world where it kind of seems like I don't take the time to really investigate this stuff too much, but I'd imagine there's plenty of companies now that have AI in their name that don't have revenue or a product or anything like that. Is that the sort of thing that makes you start doing a little research when you see all that excitement?
Yeah, I think generally speaking, it's true that the industries that are hot are the ones that attract people that are, that just want to sell a story and ride the hype wave as opposed to building a real business, right? So if you're that type of guy and fraudster, quote unquote, then you got to look for the latest hot industry, right? AI, large language models, energy, whatever's hot right now. This might have been like cannabis a few years ago, or, might be cannabis again next year, whatever. We see a bunch of companies who've been in the past in every hot theme, right? These guys are
3D
now
printing.
They were a 3D printer, they were a cannabis company, there were some pharma tech company, and now they are a Bitcoin miner, type of idea. Okay, these guys are just trying to tell people that they're doing whatever they want, whatever is the latest hype. The problem, though, is that for the time being, these companies' stocks here in the US tend to do better than you would expect for longer than you would expect, which maybe is telling you something about the regulatory enforcement that the market expects. But if it's working for the time being, even though it's complete fluff, it's hard to bet against it. So these most unattractive companies, maybe economically, make bad short targets still because everything is just air. What are you going to criticize? They don't even pretend to have financials or balance sheet. They say maybe in 2035 we're going to sell something that we don't have yet. Maybe. And the stock is running up to the tens of billions of dollars market capitalization. Well, what are you going to criticize about these guys? They kind of openly come out and say, that's all fluff. And what are you going to do? So that's something that you have to consider, right?
Yeah. It's hard to short complete bullshit because they can produce so much of it. Until, yeah. That's interesting. Yeah. That makes a lot of sense. Out of curiosity, do you go long anything? Are you long anything? Microsoft?
Yeah. Most of the time, I think about a long position more as hedges to the shorts, whereas most people think about shorts as hedges for their longs, right? So it always depends on the context. But we also come across many good long ideas, oftentimes a business that we investigate as part of an industry investigation. where we see, okay, this is clearly the best in the industry, and this is clearly just someone that's trying to ride the hype and the success of this other company. Or sometimes we come across a situation where we say, okay, this seems almost too good to be true. And then we look into it and they say, okay, this is actually an expression of a very, very strong brand in certain very important niches here of this industry that really, really matters and ultimately dictates that this company will sustain a higher margin profile than other companies in this industry, right? So, yes, we come obviously more often than not across good long ideas as well, but it's not something that we necessarily discuss as much publicly. Yeah.
Right. So would it look something along the lines of, to use 3D printing as an example, I guess, like, you choose the 3D printing company you want to short, and then you find the best 3D printing company and go long that company? Is that the idea?
That I think is a viable idea, but you'll have to also have, will turn out to be more of an industry bet in practice, I think, than you realize, right? Because the correlations of these companies maybe unduly are oftentimes high, especially in drawdowns.
Yeah.
But I think it's just maybe the general idea. You want to buy companies that succeed, and you want to bet against companies that you see set to fail. It's maybe as simple as that oftentimes. You don't have to make it more complicated than that. If you can do that, you'll do just fine.
Yeah, of course. And what's the holding period you usually, when you're shorting something, how long do you usually hold that for? Maybe it depends.
Yeah, I can't. It really depends on every situation, and for shorts especially, there's a lot of risk management involved. But I can't comment about like holding periods because it's also so specific to your context, right? Do you run a fund? Well, what type of holding expectations do your fund investors have from you? What type of risk profile do they want you to take, right? Is it my own money? And I'm asking what's the most reasonable thing objectively to do? Well, even in this context, it's a very different question of like, how much money do you have? How important is it to you for the needs that you have for you and your family for the next year? Is that really money that you could just lose and, or is that money that you will need to buy your house? In 5 to 10 years. There's so many factors that go into that I think like general answers just not something that I can be comfortable with. But in short selling, generally speaking, I think you want to stay nimble. That's at least what you can say. Things can go against you on a short notice, and you don't want to be the guy that's completely getting run over because you couldn't act. That I think is at least something that you need to think about. And then the rest of it is according to your circumstances and time horizon. There's a bunch of companies where I think, well, I'm very confident they're going to be not around or a lot lower 3 to 5 years from now. And I still couldn't short them at all, right?
Right.
Different contexts, I might say, okay, this is great to short. So there's too many factors going into that. Yeah.
Got you. And I know we're probably getting close to the hour here. Are you interested in or are you able to talk at all about the Trustpilot report?
Yeah, that was our most recent publication from yesterday. I think we've made our point there clearly, and it almost feels like we've gotten a lot of people that reached out to us as if people waited for something to happen there, one way or another. And this to get more publicity also from the investment side, because there seems to be a lot of ill will in business communities and by a lot of parties against Trustpilot specifically. A lot of people feel that this company that should stand for trust is particularly untrustworthy.
Right. And if anyone wants to read more about that, you can go to the Grizzly Research website and just read the research. I thought it was very interesting and fascinating.
Yeah,
very fascinating.
There's more interesting stuff or exciting stuff that companies try to hide. Good news, they love to talk about. Some of that nefarious stuff is what they try to hide, right? So when you find out about it, it makes more oftentimes for more explosive stories and insights.
Yeah. My last question, I guess, is, what do you think short selling has taught you that long investors could learn? What do you know that I don't know, basically?
I think something that you only get an appreciation of if you really work in this field is the breadth and depth of fraud and misrepresentation in financial markets. Like there's so much nonsense going on. My opinion is probably biased here because I'm looking for and at the nonsense and lies and misrepresentation all day long. But the sheer amount of it that is going on to some degree in almost many companies, is astonishing. It's almost as if you look at this and say, well, that's not how grown-ups are supposed to behave. You know what I mean?
Yes. Yeah. That's very well put. Is there anything, I'll give people a link to the website, to Research Grizzly at Research Grizzly on X.
Yeah. You can find us easily on X or on social media or website. And our stuff is for free. If you have a question, shoot it over. We're happy to chat about investments.
All right. Thank you, Siggy. And we're right at 4:30. How about that?
Perfect. I had a good time just chatting with you here a little bit. And stay vigilant.
Thanks for listening to the Margin of Sanity podcast. And a huge thanks to Siggy for coming on today. Once again, you can find his stuff via Twitter. They are at Research Grizzly, and all their research is free to read on their website, grizzlyreports.com. If I were you, I'd take a look and make sure I'm not on the other side of one of their shorts. Don't forget to drop a like, comment, review, or share the show on social media if you enjoy it. All that engagement really helps me out, and it helps other people find the show. That's all for now. Thanks for listening to The Margin of Sanity. I'll talk to you later.